Definitions of operating segment that engages in business activities from which it earns revenue or incurred business expenses for which discrete financial information is available. Decisions. Resources to be allocated to the segment assesses its performance. Operating segment. Not all components can be classified as an operating segment, such as head office and research and development. A discontinued operation can be classified as an operating segment.
Reportable segment is a business segment and geographical segment identified to disclose their segment information. There are four key issues to consider in identifying operating segment. Not all the operating segments need to be reported separately if they exceed the quantitative threshold. If less than 10%, then they need to report additional information.
Under segmental reporting contains disclosure, tax, other material non-cash items, profits, total assets and liabilities, internal revenue, interest income and expenses, depreciation, profits from associates and joint ventures. Measurement. Measurement is the transactions between segments the basis of accounting to be disclosed. Measurement. Differences between the entity result and the segment results. Differences between the entity asset and segment assets. Differences between entity liabilities and segment liabilities. Reconciliation of total disclosed in the segment report to amounts reported in financial statement. Reconciliation consists of 5 segments: segment revenue, segment profit and loss, segment assets, segment liabilities, other material amounts.
All Mfrs that comply with entities, including those that have a single reportable segment, need to disclose additional information about revenue of the followings.
Okay, let's take a look at this segment reporting exercise. I'll read the problem in front of you. A Stilo company has 3 operating segments with the following information, and you can see in that first table that they had sales to outsiders of 8,400, 4,200, and 6,400, broken out into 3 products or product lines: paper, pencils, and hats. They also had inter-segment transfers. You can think of those as sales between these various operating segments of 640, 1,080, and 1,600. Okay, then it also says, in addition, corporate headquarters generated revenues of 1,000. And here's the question: what's the minimum amount of revenue that each of the segments must generate to be considered separately reportable? And you have 4 choices, but let me show you the logic that you would use to solve this. So let me slide this off the screen. And here's what you do. You would total up the sales to outsiders. That comes to 19,000. Then you would total up the inter-segment transfers, or the intercompany sales or inter-segment sales. That totals 3,320. Okay, that gives us combined segment revenues of 22,320, and we'll use the 10% test to figure out what the minimum would be. 10% of 22,320 is $2,232, and so we would know that the second option is the best choice, and that's the correct answer to this segment reporting exercise.